Good day to everyone listening to me from anywhere you might be. I quickly want to do this clip for one of the major topic in financial accounting, and I want to believe it will be of help to whoever is going to go through it, maybe for the purpose of adding knowledge or for examination purposes. So what we'll be looking at today is on the topic presentation, or rather preparation and presentation of financial statement. Presentation of financial statements. Financial statements. This is one of the essence of why an accountant is actually needed in whatever forum or fora where you could find yourself working. And so let's look at this topic very quickly under the following outlines. Uh, we look at the definitions of what financial statements itself is all about. We look at the preparation, the purpose of preparations. We also will look at the components, or what we call the sets, the components or sets of financial statements. What are the makeup of what we call financial statements? Components or sets of financial statements. We look at the important futures on financial statements. Important features on financial statements. And then we also look at the formats, the expected formats that you must present each of these components of financial statement. I believe with the format, it will be much helpful for you to know how or what is expected of you. And then lastly, we look at some illustrations from a simple example. We look from ICANN past questions, and then we also look from the ACCA past questions. The essence is to know how to prepare and present financial statements. Please join us as we proceed in giving this topic a wonderful session. By definition, financial statements in the overall, they are all what I call is a document. Is a document orderly prepared in line with IFRS regulations, and guiding IFRS regulation and guiding laws of the land, and guiding laws of an entity nationality, covering a period of time, you know, of an entity. So let me read. It's a financial statements. They are documents rather. It's a set of documents. It's a set of documents orderly prepared in line with IFRS regulations and guiding laws of reporting entity of a reporting entity nationality covering a period of time. So let me put it straight. Financial statement, you prepare it in line with IFRS, International Financial Regulatory Standards. So they have regulations, they have guidelines, they have principles, that guides accountant as to how to treat various items that are embedded in each of the financial statements. And then there are guiding laws of the land. For instance, in Nigeria, we have what we call CAMA, Company and Allied Matter Act, and they guide companies as to how and when, or the importance, and then all the requirements as to how to prepare a financial statements. And then we have BOFIA, Banking and Other Financial Institution Act for banks, and dealing with how to treat financial statements that's related to banks. We equally have some other laws of the land in acts and decrees, which of course also enables the preparation of financial statements. And so, having said, given these definitions, before I move forward, please, it is important that it must cover a period of time, and that period of time usually is 1 year. 1 year, usually 1 year, that is 12 calendar months. It is an account of rendition of stewardship of those charged with governance, that is the managers of the business. So financial statement actually give an overview of how they have been able to economically use the economic resources available for an entity within a period of time. That period is usually within 1 year. So having said this, let's go to the purpose of preparation. The purpose of preparation usually either it will be it is it will be for, let's say, A, or first for internal usage. Internal usage. So if it is for internal usage, that is the management of that entity, of the report entity, they are the one majorly using the financial statement. So this is for internal users. So these ones mainly they are known as this financial set of financial statement majorly may not need you to prepare so many of for instance, so it may not necessarily need that you must prepare the full complement components of the financial statement. And so we have the second purpose, which is for external usage. External usage, which is you know external usage. This includes the public. You have government officials. You have government officials. You have government officials. You have like in government officials, you have tax authority, CAC and all others. Even employees too, they also make use of it. You have creditors, lenders, and a host of a lot of them that also use it. So these public users, when they prepare any financial system prepare for external usage, they are known as a published account. They are known as a published account. So if they are not published, the members of the public cannot use it. So our focus in this context of teaching will focus on external usage. Of course, both of both preparation follow the same line, the same format, as it were. You understand? So let's move ahead. So we have components of components or sets of financial statements. You know, We've been calling it financial statement. What are the components? What are the sets? What are those things that makes us this financial statement? Number one is what we call the statement of financial position. Statement of financial position. This is what we also known as balance sheet. That's what we know as what balance sheet. And then we have the second one to be statement of comprehensive income. Statement of comprehensive comprehensive uh, income. That's what we also known as statement of profit. Statement of profit or loss. Statement of profit or loss and other comprehensive and other comprehensive income. Comprehensive income. The third one is statement of changes in equity. Statement of changes in equity. Mm, that's the third one. Then then after this one we have what we call the statement of cash flow. The statement of cash flow. So all of these statement of cash flow. Please do not mind the noise or these other voices that you are hearing. I actually had to do this so that you know most of people preparing for exams can have a clue of what they needed to do. So we have what we call notes to the account. This is also a statement as it were because it's a statement about notes to account. Sorry, notes to account. It's a statement because you are actually making a detailed analysis of your level of compliances with IFRS standard, that is IFRS guidelines, as well as the laws of the lands that are applicable. Because they are making the statement. Why the first four they are major the major in figure. This one, the notes of the account major in words. That is, you are writing. You understand? So that is that for that. So each of them talk about what is expedient for what is expedient as a financial statement, what it should contain, uh, what is financial statement document should contain for a reporting entity. So statement of financial position talk about the balance sheet, that is the net asset of a reporting entity. The statement of comprehensive income is a statement that give an overview of the performance of a reporting entity. You know, the asset that have been committed into the business, how well have they utilized it? That is where it will show us the statement of comprehensive income. Whereas the statement of changes in equity is telling us about changes that have abounds in the equity structure, whether there are increases or there are decreases. So you always have the beginning and then the closing. So when you compare the beginning with the closing, it will tell you the changes that has occurred. We also have statement of cash flow that tells us how uh, the cash and cash equivalent, how they move within the business over time, how they were turnover, and then it also gives you an overview of the real cash that was utilized in the business. And it also the account, like I explained earlier, talks about the compliances with IFRS regulations as well as the laws that guides a reporting entity in the jurisdictions of operation. So without wasting much of our time, we will go to the format now. The format of preparation, format of preparation. So we start with the statement of changes statement of financial position. Let's start with that one. Statement of financial position. So what we do now is, before we go to this, please let me quickly go back to these important futures, important futures on financial statements. That is the future that makes a financial statement to be acceptable, to be qualified as a financial statement. Number one is it must state the status, it must state the status of the reporting entity, status of the reporting entity, that is, reporting entity, that is, whether it is a single entity that is either limited or a public entity or public. And then the second one is must state whether it is a group of account. That is, if you are doing a consolidation of account. Our focus in this class or in this teaching series is we are focusing mainly on the reporting entity that is not uh, under group as it were. So what we're focusing on is a single entity, either limited or a public limited liability company. So it must always say the status of the reporting entity. Number two is it must state the name of the reporting entity. The name of the reporting entity must be stated. And then number three is important for you to state the period covered, the period covered. And then the next one is that it's important that a financial statement must also state the currency of presentation, the currency that is utilized in presentation, currency utilized utilized in presentation. It is important. So if it is naira, put it as naira. If it is dollar, put it as dollar. If it is Ghana cedis, let's know it's in Ghana cedis. And then lastly, the rounding of the rounding of uh, mechanism, or yes, let's put it that way. Rounding of mechanism utilized, that is, if you are rounding off the figure, the figure in thousands, you must state it. If it's in million, you must state it. If it's in billion, you must state it. If it is in trillion, you must state it. So it's important for all these futures must make and must be presented, you know, very visibly on statement of on financial statements. For instance, if you're writing an exam, if you do not put these five major ingredients, on your statement of the statement that you are preparing, you have already failed. You are going to score zero. Take for instance, maybe the question that was given to you was rounded off in millions, and then but then you are solving your questions. You forgot to round off in millions. You are just, and then you were solving the questions and rounding off in thousands, whereas on the top of your financial statement you did not state whether you are doing whether you are rounding off in millions or in thousands. So all of those ones, they matter a lot. Please, it's important that whatever it is we are doing, we do it absolutely well. So let's go to the next one now. Format of preparation. Format of preparation. So we said we are going to start with the statement of financial position. Statement of financial position. So in the statement of financial position, um, we are going to start with okay, um, the rounding off figure now, and currency, and then the rounding off figure. Let's put it there, currency and then rounding off figure. So this one we are going to round off in naira. I mean the currency is in naira, and then the rounding off, let's assume is going to be in millions. So let's start. So the first thing first that comes in here are the assets of the organization or the reporting entity. Assets under assets, we have what we call the non-current assets. The non-current assets. Under these non-current assets, we have what we call the PPE. 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 That is property, plant, and equipment. You put whatever the figure is, you put it here. And the next one is um, financial assets. Or before then, put investment property. Investment property. Investment property is treated under IAS 40. PP is treated under IAS 16. You can do well to check my other presentation on each of these IS or standards, as it were. And then after this one, we have what we call the intangible assets. Intangible assets, and this one is also treated under IS 38. If I'm not mistaken, yes, IS 38. Do well to also look at some of my presentation on these. And then after this, we have financial assets. Financial assets is also under other standards, other IFRS 9, as well as other standard that deals with it. And then what else again do you have? It is important for you to know that you need to really go and look at most of these standards to have various understanding as to how they will be presented to each as in to know what exactly you are to do. Okay, let's move ahead. The next one. Okay, so the next one is biological assets. Biological assets. Also, this is treated under IS 41. Under IS 41. So please, like I said earlier, look out for some of my presentations. I've been able to outline most of these standards in a very simple manner, which you will understand them. You don't need to cram it. It's something you should know and deal with. Uh, so whatever it is, you put the figures in front of each, and then you get it down there. So under this is for non-current assets. After the non-current asset, we have the current assets. We have the current assets. So the current assets also have the following items. Have the following items. We have inventory. Inventory. Hmm? And most importantly, if you have opening and closing inventory in your trial balance, you should know that what you are bringing down here is your closing inventory. Is your closing inventory. Then the next one is trade receivable. Trade receivable. Trade receivable. That is what we used to call debtors in those days. And then the other item here is prepayment. Prepayment. All of these items they come under current asset. Prepayments are you have to pay 10 naira, but then you overpay and pay 12 naira. The 2 naira on top of the 10 naira is known as prepayment. The other one is accruals, which is under current liability. You are supposed to pay 10, you pay 8. The other two you recognize as accruals. You also have what we call the short-term investment. Short-term investment. Short-term investment. So this one too comes under current assets. An example of short-term investment is investment in a treasury bill, and then some other money market products that are within 1 year. You also have the next one to be bank balance. Bank balance. This bank balance, that's your cash at bank. Then you have cash balance, which is your uh, cash at hand. So all of these summing together, the current asset plus the non-current asset, they give you what we call the total assets. The total assets. Mm. So that is how it is. That's the format for uh, statement of financial position under asset. So after your asset, you go to what we call the equity and liability, equities and liabilities, equities and liabilities. Under this one, you have what we call equity first. We treat all equities first. So what are the components of this equity? You have the first one to be share capital. Share capital. Please don't forget to always put your NARAF sign in front. I'm just writing it because I don't have the space on this device that I'm using now. So we have the share capital. We have this next one to be share premium. Share premium. These are the components of equities. Then the next one is revaluation. Revaluation gain, as it were. And then the next one is general reserve. General reserves. Then the next one is retained earnings. Retained earnings, that is earnings after dividend has been paid, or if no dividend is paid, your net profit after tax before other comprehensive income. Mhm. The total of these is what we know as total of above is known as what we call the shareholders fund, or total equity. Shareholders fund or total equity, or total equity, okay, or total equity. Mm. So the next one is liabilities. Liabilities. Under liability, we have what we call the non-current liabilities. Under the non-current liabilities, we have debt stock. You can call it any name. You can call it long-term debt. You understand? There are so many names that they can give to it. You understand? So whatever name they are giving to it, just know that they have it falls under the long-term debt. Long-term debt. And the second one is loan stock. Loan stock or loan note, or loan stock or loan note, whatever they call it. Please just note it. Then you have what we call the long-term provisions. Long-term provisions. Long-term provisions. Long-term provisions. So it also comes under this place. Long-term provision. Then you have deferred deferred tax, deferred tax, deferred tax that is more than 1 year. Then you have other long-term liability, other long-term liability. Also falls under this one. Then you now have short-term. So we also have what we call the current liability. Current liability. Let's just put it as CL, current liability. The component of current liabilities include trade payable, which we usually known as creditors, trade payables. Then you have, sorry, please. You have the trade payables. Then you have another one. You have the accrued expenses. Accrued expenses, I explained it earlier. You're supposed to pay 10 naira, you pay 8 naira. That one is known as amount gbese, or the debt that you are yet to pay, accrued expenses. Then you have accrued loans, accrued loans, or let's say short. Well, let's just put it accrued loans because they may just use those names in your questions and you won't know what they actually implies. Then you have short-term debts. Short-term debts. This an example is overdraft. That is debts that are repayment, the both principal and interest, they are within a year. Then you have what we call the current year tax. The current year tax. That is the current tax for this period. You put it as your current liability because you must pay it in the next what is it called? Next next year financial account and financial year. So the next one is short-term provisions. Like we have long-term provisions, we have short-term provisions. So, like I said, we have the short-term provisions, like we have in the like we have in the long-term liability. So we have long-term provisions. We also have short-term provisions. And so the total of current liability and the non-current liability equals the total liability, and the total of the equity, which is also known as shareholders fund, and the total of liability will also must be the same thing as your total assets. So let me stop here. Study what we have looked at so far, and then the next video we look at the format for the other components of the financial statement, and then we look at illustrations put together. Please, if you want that video, or I mean that presentation, you can just private chat me or call me on my number so that I can send it directly to you. That will cost you just some few thousands of naira. eh? But no knowledge is waste. Thank you very much, and do have a wonderful day.